This is the daily chart for Meta, and what a remarkable run it has been. In just a short span of 4 months, the stock price has skyrocketed from around $470 per share to nearly $800 per share. Such a meteoric rise is nothing short of impressive. But as with every strong rally, the question now becomes, is it time for a breather? Based on my chart analysis, a correction appears increasingly likely. Let's break this down in detail. First, zooming into the 1-hour chart, we can clearly identify a bullish triangle formation. This pattern is considered a continuation pattern that signals a potential breakout to the upside. And yes, it did break higher. But here's the important part. Bullish triangles like this often precede final moves in a trend. In other words, this type of pattern can sometimes lure traders into thinking the rally still has legs, when in reality, it's setting up what we call a bullish trap. This means that the latest push higher in Meta could very well reverse just as quickly, catching late buyers off guard. Now, shifting our focus back to the daily chart, we see something else worth noting: bearish divergence. Price is still pushing to new highs, but momentum indicators aren't confirming the move. So, this kind of divergence often signals that buying pressure is running out of steam and that the market is becoming saturated on the buyer's side. All these signals together tell me one thing: I would be extremely cautious about investing in Meta at current levels. If anything, from a risk-reward perspective, selling or at least taking profits seems more appealing than chasing the rally here. At this point, my bias is neutral to bearish on Meta in the short term, but I'd love to hear your thoughts. Do you think Meta will keep climbing, or are we due for a reversal? Let me know in the comments, and as always, don't forget to subscribe for more chart-based market insights.